Hey, folks, welcome to InTheMoneyStocks.com's weekend daily analysis video update, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get into the market action today on this weekend. We're going to go over last week and then project into next week. First and foremost, last week was a tremendously profitable week because it was volatile. Anytime it's volatile out there, like last week's options expiration week, you know we are making big money. All right, my members here at InTheMoneyStocks.com, we don't care if it's up or down market action as long as it's volatile because we can see the price pattern and time formations and jump on the right side on the right day. Last week in the swing trade section of our website, which is the Research Center, which we offer a 7-day free trial to, we had 4 more swing trade winners just last week, bringing the grand total of winners in 2013 to over 20. With only about 5 or so losers. So you're literally batting about 80% success rate. Total gains, if you add up all the gains of each percentage winner, are in around the 165 to 170%. That's right, 165 to 170% winners this year. If you add up the losers in the Research Center, which is around the 5 area, you're talking about a 28% loss. So 165 to 170% gain with only about a 25 to 28% loss. Net gain in 2013, about 140%. That's right, folks, 140% net gain in the Research Center. Think about that. All right, now looking at last week, let's get into the market action. First and foremost, we had a little bit of a gap down Monday. This is Monday's action. This is Tuesday's action, Wednesday, Thursday, and Friday. Monday started with a small gap down, and then the selling erupted. Huge sell. And again, basically we saw the cycle start to come to fruition. A rounded top, just like my partner and I have been talking about over the last couple weeks, has been forming in the markets before a little bit of a bigger correction. And that's exactly what we're in the midst of now. Now, after the initial sell-off Monday, we got a bounce back or a snapback Tuesday, and then Wednesday just smoked that bounce back. We closed all the way down here again. Thursday, we saw continued selling, and then Friday, we got a small bounce back. Now, overall, the down cycle's in full swing, which means we have a negative bias over the next 1 or 2 weeks in this market. However, short term, all right, the market closed here, which is slightly above Thursday's high. So there's a small chance you could kind of hold steady, a neutral-ish type early period in the week. Monday might be neutral-ish. Maybe they can even kind of squeak out some gains in the market. But either way, it will not last long. Even if we bounce on Monday, a small bounce, it will not last long. All right, and we're obviously, by the way, I just want to make this clear. As I want always tell my members, we're neither bulls nor bears. We just put ourselves on the right side of the market at the right time, in and out stealthily, making money continually. And with that, I want to tell you, we actually have a couple longs we picked up late last week. All right, going into Friday, obviously a nice little bounce on the market last week, and then we'll get rid of them and make some money there, and we'll turn it around and we'll go right the other way. All right, and again, this is the way you have to trade. If you're not trading this way, if you're not swing trading, investing this way, honestly, you're crazy. I mean, think about the percentage gains that I just talked about. You know, net 140% profit. Okay, if you add up all the swing trade percentage winners. I mean, that's incredible for the first 3.5 months or so of the new year. I mean, think about that projected out. I mean, we're on a pace to do something like 500%. You know, somewhere in that realm. That is awesome, folks. That is truly awesome. 500% net this year, 2013. There's no hedge funds doing that out there. There's no institutions doing that out there. And that's why we've been in contact with a lot of hedge funds lately. Hedge funds who have been struggling with this market, they've come to us. Now, we've continued to say, hey, listen, we're not going to stop giving this proprietary techniques to our members, the average investor. We're going to continue to fight for the average investor. You want to come and learn it as well, you're more than welcome to. But we're not going to not give it to them. We're going to give it to everyone. Anyone is willing. All right, it's not like we're, like most institutions, they don't want you to know about their black box trading programs, their secret trading algorithms. All right, here, Everyone's on an even playing field, institutions and average investors alike. And we'll perform way better than institutions, so institutions are coming to us now. All right? But again, as I said, if you're an average investor, if you're a retail trader, it's right here for you. All right? Unfortunately, a lot of average investors are too lazy to try to learn these techniques, which will make them tons of money. But that's their problem. They're the ones that will lose ultimately all their money in the market, and so be it. Anyone who has somewhat of a small intelligence will come and learn it and make money. Just that simple. All right, so markets by Friday inched up a little bit. If we go to the daily chart, take a look at this. Here was your blow off top. This was a beautiful blow off top. That was your final hurrah. Then the selling came in this week. Now we are holding the 50 MA, so that's going to be a big kind of key this week. Do we bounce back and tag the 20 MA? I think that is likely. We could touch that 20, and then I think you'll start to see some more selling coming in. And I think our first projection for a target of a short-term kind of little minor pivot bottom will be right here. Okay, see this trend line for gap fill and this previous pivot high matches with this little trend line right here, this pink one sloping up. Take a look at where that comes from. If you just connect the previous 1-2 pivot lows, it all matches right up there. So right now, what I'm looking for is a move down to about the 152.75 to 153 area, and you should get some support right in there. If that breaks, which eventually it will, believe it or not, you will flush all the way down to this pivot low here, which is the 148.75 to 149 level. Okay, so you're basically going to go below 150, which again, at that stage, I mean, you're basically dropped 10 points, which is about a 7.5% drop in the market if we were to get down there. Now, short term, there's going to be great bounces along the way, and what I'm going to do, folks, with my members, I'm going to put out longs when we're going to bounce and shorts when we're going to fall. That's all it's about. And we'll take 5% there, 7% there, 3% there, 10% there. Just keep on making money. Okay? And again, it's so funny how you talk to the media, they get super bearish or super bullish, and it's like they're cheerleading the market. Who cares about that? In all fairness, usually if you go the opposite way of what the media is saying, you're going to be on the right side of the trade. Okay, and again, if you use PPT methodology, which is proprietary methods that we teach here, you'll learn it all and you'll make money no matter what. Okay, all right, 80+% success rate. That's what we aim for. That's what we do. It's awesome. There's no one else doing that. Even institutions aren't doing that, folks. All right, and again, just going over one of the bigger calls we've made, we called for a major drop on gold a while back, all right, when it was trading around 17, 18, 1900, and my target ultimately is 1200, and we got as low as about 1350, and it's going to go lower, folks. It's going to 1200. At this stage, you're getting a nice bounce here, which, by the way, I'm long on and making money on. Okay? Whether it's gold stocks, gold ETFs, whatever it is. And that's great. And you'll get a little bit more of a bounce out of gold. You'll actually get a decently continued bounce out of gold. But eventually it will turn around again. And it will flush again. That was not the end of the flush. All right, continue to look for around 1200, folks. That's going to be your final little resting place before it starts to grow very gradually, though. It's going to be a slow one after that, folks. I'll tell you that. In essence, let's take a look at the GLD now. All right, so here's your GLD. Here's your beautiful collapse. You've had a bounce back. So far, these are all inside bars. I actually do anticipate taking out this high pivot right here at around the 136.90 area. Once that gets taken out, you should grow up a little bit more here before it starts to stall out and head back down. Okay? But again, these are wide range, long bars. I do not believe this was capitulation volume down here on gold. I think this was the first initial flush of probably about 2 to 3 flushes in total, which will eventually take us to around that 1200 level. Maybe even pierce 1200 and get a little bit lower. What else do we want to take a look at? USO. USO has been an awesome one, folks. It hit my target late last week and then bounced. Obviously, pivot low right there. There's your bounce later in the week. And again, this will be a short-term bounce. It will not last long. One of the charts that I think are very ominous is the chart of JJC. Take a look at JJC, folks. I mean, this is the copper chart, the copper ETF. This thing has done nothing but collapse all year. And again, look at this, down from 48 in kind of the February period to 39. I mean, that is a percentage wipeout. Not only that, look at the head and shoulders pattern. Look at this head and shoulders. This is a longer-term head and shoulders. Extremely bearish on this. Extremely bearish. All right, if this continues to fall, your first target's going to be right here. All right, this actually would be a good small short-term bounce on a swing trade basis right off of this pivot, which is right around the 3650 level. Okay, and you'll get a bounce. Eventually, it'll break through that, but in any case, that's a short-term bounce level, no doubt about it. Okay, IBM got smoked on Friday, down $17 and change. Tremendous smoking there. absolute annihilation. Short term, where is your support? Really, it's right here, folks. All right, this is your support range right here. So honestly, if this week it were to come straight into that, Monday or Tuesday of this coming week, would I expect to bounce off of that? Yes. There's actually a little bit of a gap fill right in here too. So we have to kind of monitor this area. But anywhere in this range from I would say 85 is your upper range, but really as low as around 82. I would start getting interested right around 80, 83 to 82 is where I'd start to get interested as a quick bounce for maybe a $3 to $4 bounce on IBM. But tremendous fall, folks. Absolutely annihilated stock. We're going to have tons of earnings this coming week, which is going to keep things awesomely volatile. By the way, Nick's Master the Gap webinar, which is a way to figure out how to buy or short gap ups or gap downs. All right, haven't you always wondered that? Well, this is a gap up or a gap down in a stock. Do I go long or do I go short on it to make money? Nick's key webinar Monday evening, which again you can email support at inthemoneystocks.com if you're interested. He will show you exactly how to know if you should play it on the long side, on the short side, or if it should just be a neutral. And again, we play gaps every day in the chat room. It's awesome. I think on Friday there were just some great gaps, and Thursday great gaps. And you have to know, obviously, your entry levels, your master entry levels, which he goes over, how to stop out, how to know when to exit if it doesn't work out, how to know where to sell when it does work out. And again, these things literally, I would say about 5 out of every 6 make tons of money. Tons of money. Okay? All right, couple other things here. JP Morgan Chase, let's take a look. JPM had a good bounce. In all fairness, not surprising. Hit a little double bottom, closed above this little pivot right here. Small bounce. This will be short-lived, though. Could get a little bit more upside here, but overall, I do expect JPM to head lower. All right, folks, in all fairness, we saw Google bounce big on Friday off of earnings. Baidu was flat. Apple continues to be weak here, closing at the key level of 390. I do expect this to continue to head lower on any weakness in the market. Amazon was up $1 on Friday, and Chevron and Exxon were slightly positive as well. Earnings continue this week. I think tomorrow morning we have Caterpillar and a couple other ones, which will be interesting. And this week we have Apple. Apple's going to be the big tech play this week, and I think even Amazon reports as well. So it's going to be a fun one. Let's just keep our heads down and continue to make money like we've been doing, guys. Let's continue to make money. Come join us here. Take the 7-day free trial. Again, Research Center is geared towards swing traders and investors. If you're a day trader, you want the intraday stock chat. Join us today. Take the 7-day free trial. Start profiting for life. Take care, guys.